You're listening to the Growing On podcast, where we dig into the heart of Georgia agriculture. Each episode, we explore the people, stories, and issues shaping the fields, farms, and food that keep our state growing strong. From the latest in ag policy and innovation to timeless farming traditions, we're here to keep you informed and inspired. Here's your host, John Holcomb.
I am here in Athens, Georgia, on the campus of the University of Georgia. I'm sitting across from Will Secor. Will, how are you?
I'm doing well. How are you?
Well, Will is an economist with the University of Georgia. I'm going to get you to say your title one more time to make sure we get it correct. I know you said it a minute ago, but I just want to make sure that we're good.
Of course. So I'm an assistant professor in the Department of Agricultural and Applied Economics here at UGA, and I'm also the Extension Livestock Economist.
Awesome.
Yeah.
So Will has graciously allowed me to be here this morning with him in Athens, and we're going to talk about the farm economy and specifically touch on bankruptcies in the farm economy. Let's start with big picture, Will. Just talk to me about, the landscape of what we're seeing in the farm economy right now that, obviously I sent you that article that we'll reference a couple times in this interview, but about bankruptcies trending upward in 2025. Just give us a landscape of where we are.
Yeah, for sure. So it's really a tale of two sectors, right? We have a situation in the livestock sectors that I cover where margins have been pretty good, particularly on the beef cattle side of things, where we have really tight supplies and really robust demand, creating really strong prices. On the other side, we have the crop sector, where things are struggling. Prices for row crops, for cotton, for peanuts, they're down. And on top of that, input costs have been high as well, so those margins have been squeezed pretty considerably. So when we look across all of agriculture, we're in a situation where, by and large, we're at a tighter margin environment than we were over the last couple of years. So as a result, what we're seeing is some of these bankruptcies start to rise on those more difficult financial situations.
So I think I can't really remember if it was Georgia specific. I know it was Georgia specific for sure, but I think the Southeast overall was kind of struggling with those bankruptcies. Pardon me, I'm getting a frog in my throat, allergy season, as we talked about earlier. But yep. What makes, obviously I'm assuming that you mentioned livestock is doing, like beef cattle right now is doing well, but in terms of the crop side, is that why the Southeast or Georgia in particular may be a little bit more vulnerable right now to those?
Yeah, so I think if you look at the Southeast overall, we do have a lot of crop production. We do have situations with particular commodities like cotton that might be especially hard hit compared to other areas. But we also, kind of being maybe a little bit more concentrated in those areas. That could be part of it. There's also specialized equipment that's maybe a little bit more expensive to run and to operate that are more specialized to things in the Southeast. And that from the debt side of things, when we get into kind of the bankruptcy conversation, debt is a big part of it. And so having those debt obligations coming due, that creates a situation where aside from the income side of things and the input costs, it's also this debt that might be a little bit larger.
Okay. What factors are putting producers under that financial pressure? Outside you mentioned obviously when commodity prices are low and you have those payments coming due on that equipment that is specialized or what have you, or whatever. What factors are involved there?
Yeah. So first we think about the revenue side of things. So if those prices are down, it's limiting that revenue potential. And then we have certain situations, and this could be case by case, grower by grower, where we're seeing production issues. This past year, we didn't necessarily see widespread production issues, so it's not necessarily kind of the quantity side of that revenue equation, it's more the price. But then we look then at the rest of the margin story, and we think about variable costs and we think about fixed costs. So variable costs are things like fertilizer and fuel, seed expenses. Those have been in a place where we haven't really seen huge swings. They certainly haven't come back down to where they were pre-pandemic or anything like that. and that run up in inflation, some of those things have come down, but they're kind of where they are. So if we have those revenues that are declining, but we have variable costs being steady, some going up, some coming down, that's going to be a situation where we're squeezing the margin from that point. And then we have these fixed costs, right? Where we have equipment values and equipment costs certainly weren't going down for a number of years. That's high. We also have rent expenses that are playing a role as well, where, despite a tighter margin environment, we still see rent relatively high. And so as a result, we're getting squeezed across all of those factors.
Okay. Now, you mentioned something in there that made me, that honestly is a huge factor, pre-pandemic. I think that this issue that we're talking about is not just a 1 year issue,
Yep.
correct?
Yep.
What has, the report talks about the declining receipts for several years now. How much of that drop in income contributed to the financial strain that we're seeing today?
Yeah, so revenues are one of those things that are hitting every single year, right? But it is that kind of accumulation effect, especially when we talk about some of the most extreme kind of situations and outcomes where you're really thinking about filing for bankruptcy. It's probably several years before you really think about, okay, I've worked through a lot of my maybe cash on hand or some of my working capital and inventory. I've kind of trimmed costs everywhere I can, but I still have these ongoing fixed cost payments tied to equipment or land or other assets or other kinds of obligations you might have on the debt side. And so it's kind of that cumulative effect. If we look at where bankruptcies are, we still aren't where we were prior to the pandemic. If we think back to 2018 and 2019, those are years where we had very high bankruptcy filings. Those fell off considerably during 2020, but especially 2021 and 2022, where we saw just rock bottom bankruptcy filings. And so part of that is going to be better incomes and some of the policy support, but also some of the policy changes around stays on collections and things like that.
Okay. Now, for anyone listening that may not fully understand bankruptcy or that, describe, we're talking about bankruptcies obviously, but we're specifically talking about Chapter 12, correct?
Yep, that's right.
Describe what that is for someone that maybe doesn't fully understand, maybe even like myself.
Yeah. So the bankruptcy has several different chapters that are specific to different situations and maybe different types of folks that are in debt. And so as a result, Chapter 12 was specially designed for family farmers and fishermen. It's designed to allow a farming operation to restructure its debt, so it's not going out of business, it's not liquidating, but continue to operate going forward. So in this Chapter 12, farmers create a debt repayment plan and get that court approved and then make payments on that. And there are some different features like kind of restructuring that debt might include changing how far out that goes. So instead of needing to be paid over the next 3 years, you stretch it out over 10, or you change the interest rates and things like that. So it's really designed to try and figure out how do we equitably restructure this debt, provide protection through bankruptcy proceedings for that debtor, and kind of rework that to be kind of a good outcome.
Okay. Now the article, and I've mentioned that several times, and for anyone listening, I'm going to make sure to put that in the show notes. It's the article by American Farm Bureau, an economist there. I forget her name, but it mentions that bankruptcies are often a lagging indicator. Does that mean that financial stress on farms may be actually worse than kind of what we know right now? Is that kind of what?
Yeah, so one of those kind of contemporaneous indicators would be those farm income statistics from things like the USDA, what happened this year. But because of that cumulative effect of having multiple years of tighter incomes or negative incomes, that's what causes that bankruptcy to then be that lagging indicator. these are situations where producers may have already restructured debt or might be in a situation where they had to take on additional debt that they didn't have, 2 or 3 years ago. But because of those tighter margins, maybe more expensive inputs, they're now having to borrow additional funds that now 2 or 3 years later, they're no longer able to see an opportunity to pay those off, and so they are looking at bankruptcy as an opportunity. So in that respect, it's that lagging indicator. We really see kind of the start of issues happening this year, but bankruptcy won't start to increase because of opportunities around restructuring income and debt till 2 or 3 years later.
Okay. I'm going to kind of piggyback off that a smidge, but whenever you start to see an increase in bankruptcies, obviously that's not a good sign for the farm economy. Yep. Obviously you don't have a crystal ball.
Right.
But what is that, I guess, where do we kind of stand in 2026 then, I guess? I think that's, we hear, I see it a lot, I'm on farms a lot, talk to farmers a lot. It's not looking very bright. I mean, farmers are eternal optimists.
Yep.
But I've never seen it so, bleak.
Yeah.
And so, from your viewpoint, where do we stand this year? What does the future look like, I guess?
Yeah, it does not, again, from the protein side of things and the livestock sectors, it's okay. You go sector by sector and there's some nuance to it, but it's generally positive. But when we look at the crop side of things, it does appear to be shaping up to be another difficult year. So if I think about it from what would I expect from bankruptcy filings, if we had 2025 being another difficult year and we saw bankruptcies rise from that, and we expect 2026 to be another difficult year, that might be another situation where we potentially see bankruptcies rise again.
Okay. From what from the information that you gather and the people you talk to, and I think people that are on the outside that aren't farmers looking in, how do you fix it? What's the fix? Obviously it's good news that we have news on the farm bill moving out of House Ag Committee. Great things, obviously, but how do we fix this?
Sure. Gosh, that's like $1 billion trillion question, I think.
Yeah.
I think about supply and demand fundamentals, right?
Okay.
So we think about, are there opportunities to increase demand? Are there new uses for different commodities, whether that's row crops, but also timber industries and even livestock sector, right? Finding different outlets and different uses for those products. So the demand side is going to be important to try and find ways to grow that going forward. When I think about the supply side, finding opportunities either on an individual operation or from kind of an industry-wide standpoint, what are those ways in which we can find new innovations, new technology, broadly speaking, new ways of doing things that create an opportunity to reduce costs, increase efficiency, not just to make more, but to really add value for the producer. I think some of the other drivers, just in general for farm bankruptcies, a big factor is going to be those farm financial conditions. But part of the eligibility for this Chapter 12 bankruptcy in particular is tied to where the income and where the debt is coming from. So at least 50% of the income needs to be tied to the farming operation, and 50% of the debt needs to be tied to the farming operation. But what that means is up to 50% is coming from somewhere else. And so what we do see is that kind of broader economic issues also play a role. So if you go back to 2009, 2010, we might have had farm financial situation, but the macroeconomy in the U.S., we're in the midst of the Great Recession, and we see farm bankruptcies also increase. And so there's both what's going on in ag, but also the broader economy that's important to keep an eye on. And maybe one thing that maybe is something that won't create such a skyrocketing Chapter 12 filing rate in 26 or 27 is that we generally have a relatively strong economy, at least from the data we've seen so far. Certainly there's volatility to that. But we aren't in the midst of, a great recession from that standpoint. Yeah, that would be one thing.
Okay.
Yeah, I think a last thing is, when I've done some work in this area, and just it's an opportunity to think beyond kind of some of the broader statistical numbers that you get. You look at the aggregate net farm income, or you look at a cost of production per acre or per bushel produced. But when you really think about bankruptcies, or even get to see some of the filing information behind it, it hits home for someone who looks at CME prices and other things and market statistics, that you see, the real story of a real farmer and a real situation. And I think that it takes real courage for someone to kind of look at where things are and see this bankruptcy as a tool, right? It's not the end of the operation. Chapter 12 specifically is designed to find a way to keep that operation going, and think about this as a tool to help their operation move forward to meet the goals for themselves, for their family, for their operation longer term. So seeing it as a tool, but then also just being able to reflect on it and seeing that these are individual operations that are seeing those margins squeezed and making difficult choices.
Okay. One thing I do want you to touch on that I was reading through my notes here. I want to talk on operating costs. Specifically touch on operating loans.
Okay.
I think that I just want you to touch on that from a standpoint of, number one, what is an operating loan, and how does that differ? Is that part of the general equation of how a farm operates,
Sure.
and how that ties into, or how that puts strain rather on operations and the farm economy,
Sure.
whenever commodity prices are just kind of in the trash.
Yeah. So it'll vary operation by operation.
Okay.
Some of them are going to be able to avoid operating loans if that's their strategy. Others see it as an opportunity. Basically, the idea is at the beginning of the growing season, you're putting in a lot of your inputs, right? Seed, fertilizer, a lot of the fuel that you've already run if you're doing some tillage or other things. Crop protection you might have already pre-bought. That's happening in the spring, and you aren't necessarily going to see any revenue from that until sometime in the fall. And so that operating loan is something that you're able to get at the beginning of the season, and then after receiving payment on all those commodities that you've grown, now you have an opportunity to pay that off. It's not going to be for everything necessarily, but it's going to be that opportunity to, instead of having to hold on to that cash and use it up front, you can use an operating loan instead to do that. To the extent that now we tie that into higher costs, okay, so if we have more expensive inputs, now we need a bigger operating loan. On top of that, interest rates are not what they were 10 years ago. And so as a result, we also have increased borrowing costs on that larger loan. And so that's kind of a double whammy that can impact, especially from a bankruptcy standpoint, where you're taking on potentially more debt at a higher expense.
And then whenever you tie in those low commodity prices,
Bingo.
At the end of the season, you're just absolutely in the negative.
Yeah, and that's where having a good relationship with your lender, but also having lenders that know what agriculture is like, the cycles that agriculture go through, can be really valuable.
One last question, just from how are the lenders? This is a situation that we're looking at. Obviously, a very, let's just say, kind of dark approach to agriculture.
Sure.
But on the other side of that, you have the lenders that So when you tie on all these factors together, Chapter 12 bankruptcies, loans, operating loans, what have you, where do they stand? Is that a valid question?
Yeah, yes, and I think the thought that I have when it comes to them is, from a lender's perspective, when a farmer succeeds, they're succeeding, right? And so they're kind of on the same side of trying to find a way for that operation to work well. It's a partnership. It's it's a relationship that can be fruitful and hopefully is a win-win in all circumstances, because if that operation is succeeding, they're going to pay back their loan, they're going to pay the interest on it, and that means that gives an opportunity to, from that lender standpoint, to be able to provide more credit to either that individual operation or maybe a new farmer, or to finance a home or something like that. So that's one of those where it's a win-win. Lenders are always cognizant of the risks that they have out there, so they might have to be thinking more carefully about different kinds of loans and what their risk appetite is. But that's all part of kind of their whole business, is understanding what's the risk, what does it cost them to borrow money, and where can they find those win-win opportunities.
Okay.
Yeah.
I don't think I have anything else.
Okay.
Is there anything else that you have that you want to mention or say?
I don't think so. It's bankruptcies can be a hard conversation, particularly at the producer level. But having conversations, knowing what your goals are, more broadly than just, I'm in this really hard financial spot. Having those conversations with attorneys, with lenders, with important family members, stakeholders in the operation, it's always important to have those conversations. But knowing what kind of that end goal is and how you can get there, bankruptcy is just one option that can potentially help in that difficult spot.
Awesome. Well, thank you for the time. I really appreciate it.
Absolutely. Thanks.
Thanks for listening to the Growing On podcast. Be sure to tune in soon for our next episode. Until then, be sure to rate, review, and subscribe to the podcast if you haven't done so already.